Dave Bartosiak with trending stocks at Zacks.com. The hodlers are on the ropes. Even legitimate stocks tied to crypto are having all sorts of problems. It doesn't take me to tell you that Bitcoin prices are less than half of their highs, but I'm not a crypto hater. In fact, I welcome blockchain technology and all of the wonders that go along with it. I am, however, a realist. And the reality of the situation is that right now, things are not looking so good. But that can be said for a lot of traditional stocks that are out there too. Coinbase has come under the gun recently as the exchange faces SEC scrutiny. According to a report from Bloomberg, the SEC is investigating the company for improperly allowing trading of several tokens that should have been registered as securities. The initial market reaction has been decidedly negative, with coin shares down over 18% at the time of this video. I don't think this is the end of the road for Coinbase at all, though. This could actually be a very good thing for the legitimization of Coinbase as an exchange. This latest probe is merely a bump in the road. Now let's take a look at Zacks.com and check out some of the fundamentals on Coinbase as well as some other names in the space. So Coinbase is currently a Zacks rank number 3 hold. It has a C for its value score, C for growth, and F for momentum, giving it a VGM composite score of C. So a 3 that's a hold and a C that's about as average as it gets. The securities and exchanges industry is in the bottom 18% of our Zacks industry rank. Now let's take a look at some things here. First of all, we've got earnings coming up after the bell, August 9th. So you got a couple weeks until you see that. There's actually a positive earnings ESP. Now what does that mean? That means that analysts are expecting a beat. They just don't want to tell you that. Now let's take a look at what happened last quarter, though. They're expecting something big, and what they got was a big, nasty red number in return. But the growth numbers here, current quarter, not so hot. Next quarter, pretty terrible too. Current year, not liking it. But next year, my friends, next year is when everything's going to turn around. 71% growth. That's the forecast coming from analysts. That's way, way out there. So hopefully that happens. Compare that to an industry average of 14.7%, and the S&P 500 just 3.91%. So a little bit different there going on. Now let's take a look at the sales. Current year sales, negative 49%. But next year, that's going to boost up by 23%. We already talked about the EPS side of things, and yeah, it's not looking that great. However, recently you have some movement coming from analysts, sort of all over the board. Somebody going down, somebody going up, up, down, up, down. So there's a mixed bag of how analysts feel about this stock. But how has that translated over to our Zacks consensus estimate? Here's where you see the nastiness, okay? Current year number, 90 days ago, they thought they were going to make $2.67. They're going to lose $8.46 this year. Look at it next year, they thought they were going to make $5. That shrank down to a $2.44 loss. So not exactly what the company was promising during its IPO. And here you can also see that really nasty downside surprise that started stuff moving in the wrong direction. That was coming off a big beat, an okay loss, and then another big beat. So what gives? Let's take a look at my favorite chart, the price consensus and EPS surprise chart here on Zacks.com. We can zoom in on this bad boy too. If you just go ahead and hit this plus sign, of course, it's just going to zoom you into the middle of the chart. So you got to use this arrow to kind of get over and size it up so it looks good. So there we go. Now, the black line corresponds to the right y-axis, which is the price. And yes, you looked at that right. There is somebody out there, some poor person. Well, they weren't poor before, but they might be poor now. $342 they bought this stock. And since then, it's been straight down. Take a look at these multicolored lines. These represent the evolution of our Zacks consensus estimates over time, correspond to that left y-axis. So what are we seeing? Overpromise, underdeliver, right? And that's what you're getting from this stock. That first miss took shares to that basically that first IPO day price, and then from then it's just been downside action after downside action, going from what they thought was going to be positive pretty good to be negative pretty significantly. So is this story over? I don't know. We're hoping for a little bit of a trough in earnings, but we've yet to really see that. So I'd be concerned about more downside before things start to get better. Dave, why are you so negative? I'm not trying to be negative. Let me give you some positive. Here's another stock, okay? Same industry, securities, and exchange, and they have a little bit of exposure to crypto. They have a recent deal where they acquired a firm that's involved in the space. That was back in October. So, CBOE, shout out to the homies back home in Chicago on this one. Zacks ranked number 2 by a D for value, A for growth, B for momentum, hover around with a VGM composite score of B. So already things are looking a little bit better. This is another stock that's set to report, in this case, after the bell on the 29th. So right around the corner. That is this week, I believe. I'm sorry, before the bell, before the bell on the 29th. I believe that's Friday. Last EPS surprise, 3.5% better than expected. Okay, but let's take a look. Let's dig in here a little bit more. So current quarter growth estimates. Yes, there's some growth. Next quarter, a little bit. Current year, 6.78%. That's better than industry averages, just 2.6. So you're getting a little bit of growth there for the current year. Next year, that's supposed to slow, sort of in line with the S&P 500, but not in line with the rest of the industry. Right now, stock's trading about 19 times earnings, a little richer than the S&P 500, but a little bit better, just a shade better than the industry average. The growth numbers are not insane here, but they're there. 12% revenue growth for the current year, 4.8% next year, translating to EPS of 6.78 for the current year, 3.02 for next year. Let's see how they've done recently here with the analysts. You got 4 analysts up in the ante for next year, 4 for the current year. Also, well, there's 1 or 2 that are cutting those estimates. What has it done to our Zacks consensus? Well, 623 90 days ago. Now we're up to 646, 652 for next year. Now he's got the mark of the beast, 666. Take a look at the surprise. Oh, there's been some decent surprises. So at least these guys are managing the expectations of those analysts. Let's take a look again at my favorite chart. You already know how it goes. Price consensus, EPS surprise chart. A lot of choppiness happening for this stock, right? And why? Well, because the earnings are kind of choppy. You get a little bit of love and then it falls off. But look at recently. Early 2021, this thing really found its stride. And now those 2023 estimates are better than the 2022 estimates when they started all the way down here. So that was a great move for earnings, followed by a great move in the stock. But there's been a little bit of divergence since the start of this year, with shares of CBOE going down while earnings continue to go up. That's exactly the sort of divergence I like to see, because eventually the rubber meets the road and the stock catches up with earnings. So as long as these earnings move in the right direction, I think it's a good thing for a stock like CBOE. So if you want to get a little bit of exposure to the crypto space without rolling the dice on something like Coinbase, take a look at CBOE, ticker CBOE. Every time you share this video, a 40-year-old man hits big on crypto, allowing him to move out of his mom's basement into his old room. Subscribe to the YouTube channel, Twitter @Bartosiastics, and be sure to check out Zacks.com/promo for this week's deal on commodity innovators. For all of us here at Zacks, I'm Dave Bartosiak, and I'll see you next time.